Lloyd's now in a position, Lloyd's always had strong views on lots of topics and informed views and interesting views on lots of topics. He's now in an uninhibited position where he can talk about things as he sees fit. You know, on the topic of buybacks more generally, look, one of the things that we spend a lot of time talking to clients about is capital allocation. How they think about investment, how they think about returning capital to shareholders through either dividends or through buybacks. And I think there's a balance that always has to be struck there. You know, companies are stewards of capital for their shareholders. They need to invest in their businesses. They need to invest in their people. Those are very important things that companies need to do. And that's got to be balanced with, if they don't see the appropriate opportunities from an investment perspective, getting that capital back to shareholders in the most efficient way possible. And so this is different for every company. I know when we think about it at Goldman Sachs, we think a lot about how we invest in our people, invest in our business, but also how we steward that capital for shareholders. And, you know, I think it's a reasonable debate for any company to think about what's the right balance.
Hey, David, it's Sarah. I have an economic question for you. So the market's clearly been very strong this year. I'm good, thank you. But we are seeing some signs of a slowdown in the U.S. economy. Auto delinquencies are rising. Small business optimism is fading. What's your read right now on whether we're slowing, and if so, how much?
Well, there's no question that the momentum of growth in the United States has definitely slowed. The trajectory is not quite as strong as it was a year ago. We're through, part of the benefit of tax policy and tax change. And so there's no question that that growth trajectory is a little bit different than it was. That said, economic activity in the United States is still chugging along pretty well. I think we're in a position at the moment where we should see reasonable growth during the course of the year. Let's say, 2 to 2.25% growth, which is not bad. And so I think we're in a place where the chance of recession in 2019 is actually quite small, and the economic expansion should probably continue.
What about globally? How much has the picture deteriorated there?
Well, there's no question that there are certain places around the world where that growth trajectory has slowed a little bit more. And so obviously that contributes to the overall picture with respect to global growth. There's no question that growth in China has slowed, but yet I would say that growth in China is still, reasonable by any standard, even though it has slowed. And there's certainly pockets of Europe where we've seen a little bit of slowdown. But I think the comments I made, broadly about the U.S., while not quite as strong, when you look at the overall global growth picture, I think things are still chugging along okay at this point in time. And I don't see a lot of data to say that that slowdown is accelerating or in any way, shape, or form heading towards some sort of a global recession.
Related to all of this is how the trade war between the U.S. and China is solved. There's a lot of optimism in the markets. It sounds like President Trump wants to make a deal. If we did get that, what do you think that would mean to the markets and to the economy?
Well, I think, look, if you look at the start to the market year, coming off of what was obviously a difficult December, it's been a relatively good start to the year. And I think part of that is over time, and you guys have reported this quite a bit in the last 24 hours, the market is coming to a point of view that there will be progress on the trade talks. I think that's an important kind of next step for investors. They want to see that progress. And so, to the degree that progress progresses, I think that's a positive sign for markets.